black market currency trade in Ethiopia. As foreign reserves dwindled and fighting in the country's north resumed, the spread between the Ethiopian currency's official and parallel market exchange rates reached a new high. According to people familiar with the matter who asked not to be identified when speaking about the parallel market, the birr traded as high as 105 per dollar on Monday, while the official rate remained at 52.59. The exchange rate gap is widening primarily due to the increased risk associated with the country's ongoing conflict, according to Fikadu Digaf, vice governor and chief economist at the central bank, in a phone interview. According to him, the imbalance between foreign currency supply and demand is a problem, and government monetary policies are less effective as a result of the high cost of the nearly two-year war with the dissident northern Tigray region. A March truce expired in August, worsening the humanitarian and economic situation in Africa's second most populous country. Ethiopia's economic growth may slow to 3.8% in 2021-22, according to the International Monetary Fund, due to the conflict, lower agricultural production, a drop in donor financing, and worsening foreign exchange shortages, drought, and spillovers from the Ukraine war. According to the East Africa Macroeconomic Outlook published by Deloitte LLP, Ethiopia's foreign exchange reserves stood at $3.3 billion at the end of 2021, covering only 1.9 months of the country's import costs. Meanwhile, August inflation reached 32.5%. Loans from Ethiopian lenders totaled approximately $1.09 billion in the fiscal year ending in July, compared to $3.33 billion in Since 2019, the government has been depreciating the birr against the dollar in order to shore up foreign reserves. Ethiopia's central bank depreciated the local currency by a weighted average of 26% between February and May. The latest debt statistical bulletin from the Ministry of Finance revealed that disbursement by external lenders is declining at a rate not seen in the previous 4 years. The net inflow of forex from external sources was negative $551.9 million, while loans committed by the same lenders fell to $290 million in the previous fiscal year, which was 6 times lower than in 2020-21. Last year, multilateral lenders showed little appetite for dispersing loans to Ethiopia, a situation that experts believe is related to the war in the north and the deterioration of relations between the Ethiopian government and Western countries, including the United States. Multilateral lenders, including the World Bank, the African Development Bank, AFDB, and the International Monetary Fund, IMF, dispersed $773.1 million in loans during the previous fiscal year. It is 3 times lower than it was 2 years ago, with a 16% decrease from the previous year. Donor re-engagement is critical. Tax revenue accounted for only 6.2% of GDP in 2020, according to World Bank data. Even in an African context, this ratio is very low, indicating that the government's ability to generate resources domestically is rather limited, said economist Patrick Heinisch.